All right. Hey, everyone. Welcome back to another episode of In the Charts. It's been a couple of weeks since we've been able to join you. We've been kind of on the road for the last few weeks. We're excited to get back to it. Diogo already ran the randomizer, and I am the first one to go. So let me share my screen. And lo and behold, I'm going to be talking about stablecoins. This is a chart brought to us by our friends Artemis, and I think it's a good chart. So next week, for those of us in the stablecoin ecosystem, is Money 2020, which is one of the big conferences. It happens twice a year. This one's going to be in Vegas, and I think it's a good time to check in on how things have grown year over year in the ecosystem. And our portfolio company Artemis, not financial advice, put this chart together for their annual report, and you can see a couple different things happening here. I think the first one that's obvious is the growth of the entire stablecoin payments ecosystem in the last year has been pretty profound. And you can see the different subcategories here. Interestingly enough, this little green sliver right here is P2P payments, which is actually down to flat year over year. The purple is B2B, which looks to be up like 2 to 3 times year over year. And then card is this like light blue sliver, which is up about 100% year over year. It's kind of hard to see given the growth in B2B. But I wanted to use this as a way to frame like the stablecoin thesis over time. Stablecoins obviously started off as a way for people to hedge volatility on exchanges, specifically crypto exchanges. And then that liquidity was then used to enable cross-border payments. And I think the story of 24 so far has been extreme growth on the B2B side with stablecoins as this like new payment rail. Obviously, every single thing in the news lately has been about XYZ financial institution now adopting stablecoins. The Genius bill, I think, in the United States has been had a large impact here. But I wanted to focus on cards because it feels like the next like boss here is getting people not to just use stablecoins as a rail on the stablecoin sandwich sense, but to actually get people to hold stablecoins and use it as a unit of account. And the cards are kind of imperfect, right? Because it's a little ironic to send or pay interchange on a thing that you can actually send on chain, free, instant, but pay 2.5% to the banks. So it's a little imperfect, but I think it's a good proxy for thinking about how people are actually using stable coins, holding a balance, being able to pay with merchants. And I don't know, I wanted to open up a conversation with this in mind about how you guys are thinking about contextualizing some of the growth in stable coins last year and maybe where
So
we
it is
go
interesting that
in the
it
future.
is not the unit of account, because the unit of account clearly is the dollar, and this table is just a proxy for the unit of account that is the dollar. So it's not like we're trying
Yeah,
to
that's
change the
right.
unit account, which is kind of magnificent and fantastic, because that's why stablecoins are so exciting, is because we don't have to convince people to move to a new unit of account. They just like the dollar is already the dominant requested currency in the world for settlement, etc. People are just like clubbing onto this. I'm actually surprised cars haven't grown faster. Maybe we're just, oh, well, we absolutely live in a bubble, but we see so many pitches and we see these companies grow so fast that I would have thought, it clearly is like 4x since like 2023, August 2023 or more. And so that's amazing growth. But really the story here, obviously from the chart, is the B2B payments, which also instinctively were growing. I just didn't relatively had really the sense. That was the first thing that jumped at the chart, that the B2B aspects were so dominant compared to the card aspects. And cards are growing, but not growing as fast, which is kind of a fascinating view here.
Yeah. Cards are actually a derivative. So, Breck, when you were talking about, moving beyond just stable coins as being used for a rail, and maybe another way to say that is that there's fiat on-ramp, stablecoin transfer, and then fiat off-ramp. And so the money just starts in fiat and then ends in fiat and exits the crypto ecosystem entirely is kind of that sandwich.
Yep.
For card payments, actually, you're spending typically against a stablecoin balance in a wallet. And so it is an indirect measure, I think, of some type of balance that lives on chain. And historically, when you've had a balance that lives on chain, it felt disconnected from the real world. And so you would have to fiat off ramp it. But now maybe there's more utility in that balance, because without having to fiat off ramp it, you can use it for commerce activities, right? You can go and swipe that card at your local coffee shop, online, wherever you want to actually go spend it. And so it's kind of this chicken and the egg problem where like card payments can't grow without more stablecoin balances, and stablecoin balances are, fundamentally limited if you can't do anything with them. And so I think we're starting to see this flywheel start to kick off, Diogo, to your point. So I don't think we're quite there at, my mom's not going to have a stablecoin card. But, for the folks that are in the crypto ecosystem, certainly they're going to have some balance, and they don't want to have to go through all the rigmarole of having to off ramp it, et cetera. So they're just going to start there. And then we'll see if we can actually expand that to other people if the value
Can I just,
proposition sticks.
I am at the position right now that I
Yeah.
think your mom will definitely use a stablecoin card. And the way that she'll use a stablecoin, or the why that she'll use a stablecoin card, is because even though she lives in the US, let's assume, and thus has access to the traditional card ecosystem, new fintechs will choose to build on stablecoin rails because of the reg arbitrage, because of the cheaper fees, because of the programmability and the composability. And so just the new fintechs of the future in 15 years, if your mom ever switches from, Chase to something new, that something new is likely to be powered by this type of system, settled directly to Visa without going to the banks because it's cheaper, and it has less counterparty risk. So I think that's actually the way. She won't know, to your point, she won't know it's stables, but I think she will use stables. So
If
my
she's willing
prediction
to
is
use
that,
something new.
yes,
that's
my
the
prediction is
hook.
that Chris's mom specifically, in 50 years, we're going to be here. We're going to ask Chris's mom if she uses a stablecoin backed card.
So
We're going to have to look at it.
What's actually funny about that is, I'm going to dox my parents now, but they're fairly old. They're not super tech savvy. Like, I got to go and set up Uber for them. Like I got to go download the app and set it up.
You're
for
still
them
their
and
tech
teach them how to
support
use it.
for sure.
Yeah, I'm IT, right? And they have their bank account, which works fine, and they were trying to buy some financial product, and the local bank or the bank partner that they use said basically no, it's like too risky, like you shouldn't buy it. And I was like, that's dumb. Like, why don't you just go download Robinhood and you can just buy it with 2 clicks? And they're like, what's Robinhood? And I told them, you could, some of these things you can also buy on Coinbase if it's crypto, but Coinbase today at least doesn't offer all the things that Robinhood does. So just buy Robinhood, or download Robinhood. But to your point, like all of these things are going to collide, and they're all going to look the same, and they're all going to offer everything. And, these old financial institutions have these really old rules, frankly, that just are not really relevant or applicable. And so, it doesn't really matter what their rules are, because you can just go download an app that doesn't have those rules, and you can just go buy the thing you want to go buy. And that will certainly happen. Or at least like they wouldn't have known about it, but if they have children, then, the children will tell them. So that will happen.
And it's kind of the point, right? Stablecoins are just the on-ramp. And then RWAs will bring all the other assets they can buy onto the same self-custodial mechanism. And then it's game over, because these things are much better. And so either there's like some regulatory crackdown in which these things are actually not possible to use, which doesn't seem to be happening right now, or hopefully the opposite, which is the same way that Genius Act did to stablecoins, regulatory recognition that these things are okay and they're more efficient. And eventually everybody has to switch because it's much cheaper to live in this new regime operationally.
Yeah. If I had to guess, if we come back here this time next year, the card chart will look more like the B2B chart. Like I think we're just earlier on in the curve. If I had to like make a prediction, and like I think of it as like B2B is kind of the leading edge for the consumer payments. It's a little backwards. Like I think you'd actually expect consumer technology to sort of like speed run the enterprise. But I think we've like tapped out the consumer side on the crypto. Like P2P crypto is going down. And so clearly I think I would expect card payments to look like B2B payments next year. And maybe we'll come back and check and see if I'm wrong, but I feel like we're accelerating on that front. And I think we'll see more of the like fintech entry points allow regular people like Chris's mom to actually use stablecoins and not know about it. I think we're still in the place where like if you're using a stablecoin backed card, like you're using a stablecoin, you're probably calling it a stablecoin backed card, right? And
I
that's
love
kind of
that Chris's parents now are the stick yard for usability.
We're gonna have to bring him on the show. We're gonna have to bring him on the show.
We're not doxing my parents. I'm sorry, we're not doing that.
Chris,
But I do have a relevant. I have something that's somewhat relevant to this conversation. So can you guys all see this? Yeah, perfect. So
Yeah,
Diogo shared this in our internal Slack channel, I think last week, or maybe it was earlier this week. And this is pulling straight from Visa's Stablecoin Report. And it shows the amount of loans and deposits that are based off of stablecoins over time. So you'll see here, this is the total stablecoin liquidity at the top in lending protocols. And you can see that this is going from Jan 24 through about July 2025. The bottom is the actual loan balances denominated in stablecoins outstanding from Jan 24th to July 2025. And needless to say, these charts are just straight up and to the right. And the reason why I think this is relevant and a good follow-up to the chart that Breck brought up is stablecoins as a payment rail, and the utility of that is great. But I think we should all be looking for opportunities where we can keep the funds on chain. And that is going to be such a compounder in value if we're able to actually figure that out. And one of the big areas that we have thought about a lot is actual credit on chain to some degree, or loans or credit on chain. And it's actually really interesting to see this actually start to grow. They're still very small volumes, but clearly we're starting to see stablecoins actually be used for more things in financial products other than just payments now too. Like payments are just the first thing, and naturally they'll lead to more and more and more financial services, and they're likely going to be more originated on chain in the future than it is today. So Diogo, I wanted to kick this one over to you because I know you've thought a lot about this one.
Yeah, I mean, it actually is connected to the last chart. I think one of the really interesting questions that I was going to ask Breck, and I think it's relevant here, is what is the combination of charts that tells us that we're actually building a stablecoin economy, in that there's no off-ramp happening of the stablecoins into the ecosystem? So which combination of charts are actually like showing us the progress of an economy? And look, of course, there's economy if stablecoins are the stablecoin sandwich and we're like on-ramping and off-ramping and using them as a mechanism to off-ramp. But there's much less utility than when we realize that a lot of them are going to stay within the ecosystem, because that's when a lot of new business models kick off, which is you don't have on-ramp, off-ramps, you don't have KYC, you just already have these tables. And that's when it truly becomes like real economy, bot economy, agent economy. All of that has to be within stablecoins without on and off-ramp. And I'm kind of curious on like, what is the set of metrics? Is it like, on-ramp without off-ramp? Is it, just like looking at the flows in and no flows out? Is it just, issuance and outstanding stablecoins? In which case, there's also a lot of confounding components in there. Is it a mix of Breck's chart with off-ramp? So I'm trying to like also which portions are the best ones to kind of like visualize if they're stablecoin economy or not already.
I think it's the right question to ask. I don't have a great answer. My intuition though would be that stablecoin outstanding is not the right chart, because I think there's like already so much liquidity that I don't know if we need like $1 trillion on chain, if that makes a difference. Obviously, like that's like probably the leading edge, but I don't know if it tells the full picture. I actually think the Artemis chart of contextualizing the payment flows is probably the best way to look at things. Like you can tell if it's like, even, B2B isn't even like giving us the full context, because we don't know if it's like an on-chain transfer or if it's part of a stablecoin sandwich. I think the assumption is that most of the B2B transfers are in some way or form on-ramp, flow, off-ramp, but that's an assumption. And so I would assume like getting the end-to-end understanding of like, is this part of a broader fiat to fiat transfer, or is it staying on chain more? So that would be the most interesting for me.
Well, I was thinking actually the like end there's probably a bunch of intermediate metrics to track, but the end goal probably isn't any different than the end goal for any of these fintechs today, which is how do I become your primary financial account? And that's why a bank is so insistent on, can you make sure that you get a mortgage through me? And can you make sure that you do direct deposit into my account? And if you do, then I'll cut you some, special privileges or rates or whatever discount off of other products. And so it's going to be some combination of these things, which is like, obviously the money just has to stay there. But once it stays there, it has to be able to do the things, that you would typically do, and then actually act as the primary financial account. And I think that's where we need to go.
Yeah, but to that point, there's a way in which stablecoins are massively successful on the backs of individual companies that capture great, they capture all the financial relationship, but they use stable coins as, just another rail, just another payment rail, just another remittance rail. And that's not true success for us, right? So that's not what the ecosystem is looking for. As investors, if we invest in that company, we're going to be very happy about it. But the ecosystem has not flourished to the point where, it's truly internet native finance, which I think is a layer above that, which is you can have that not be the case and still have massively successful consumer companies that use stable coins to lower costs, lower compliance, et cetera, and then be themselves massively successful. So that's an interesting one. Also, can I just point out that one of the things that this may just be able to show is Athena's, and specifically Guy's, execution. Athena's issuance is around, $12 billion or something. And right now, SUSD and the looping or Pindle, like this is one of the most looped stable coins because it's people getting access to this delta neutral trade on crypto, which traditional finance is still not like arbitrage down to zero. And these yields are very juicy. Like in 2023, I think it was like an average of 18. In 2024, it was an average of like 12 to 14%. And it's still annualizing at those kinds of rates. And you can loop it in something that actually has low volatility. And so people can actually make a lot of money right now doing an arbitrage that, traditional financial institution hasn't quite gotten into it. And it's easy to loop these things and everybody offers them. And, it might just be like a lot of this is just Athena being successful. And that graph is just Athena.
Yeah, maybe it is. I don't actually know the one click below it.
Have you guys tried, by the way, have you guys tried to loop it? I think we should try to loop on all of these. I've tried a few of them, keeping under our compliance minimum or maximum, which otherwise.
Many loops we can do.
No, there's not many loops that you could do.
I
But it's
looped
actually
half
kind of fascinating.
0.5 times.
And it's still not as easy as you'd expect it to be. Somehow, like so many pitches for so many years, we've heard that, the UX is not there, UX is not, and on and on and on, and great founders and it still is not there. Like it's extremely complicated in, Chris's parents, using that example again, are absolutely no chance of like looping SUSD.
Diogo, like there's these really powerful things that you can do, but you have to seek it out. Like you have to be very sophisticated. You have to be willing to put up with like what most people would consider a crappy UX. Like you have to like seek out these opportunities. And I don't think we've yet seen the larger like sources of money that like in my life that I use, like be willing to just like fully abstract it away. Like of course there are examples like Phantom has launched Phantom Cash, but like the reality is most Phantom users are still pretty like far out on the like risk appetite curve. And I think maybe, I was talking to a fast growing fintech earlier today, like they're starting to think about stablecoins. Chris, I know you've been talking to some of the EORs, like maybe we'll start to see some of these fintechs actually productize the two core value props of stablecoins being cross-border payments that are cheap and like retained yield, like actually into their product. And that's where you get Chris's mom using stablecoins without it even knowing.
And
like,
she's back.
That's what I'm waiting for, and like, of course people are having these conversations, but I don't think they've actually materialized in product yet, or they've like, been turned on. And that's the core value proposition for some of these products.
And by the way, I think one of the problems that is like everybody faces is that primarily the set of crypto users continues to be the same types of crypto users. And, there's an adjacency of people that just know how to buy Bitcoin, but going from just buying Bitcoin or just buying crypto asset to actually like going and doing something, is the drop off is absolutely massive. And so the reality is that it's always the same sets of people. And so we just focus on like the next best type of engineering or like type of new product so that people can kind of go in and like play with it and large institutions can benefit from it. But there's no net new crypto users that are like new to crypto and not extremely savvy. So that number is actually extremely slow growth.
It's almost like, how everyone like had an AI strategy right after ChatGPT, and then it took like a year and a half for those to actually materialize in product, where it's like, oh, Notion now has like an AI thing where I can like transcribe calls or I can like ask questions. Like we're still in that like messy middle between when everyone tells everyone they want to have a stablecoin strategy and when it like actually starts to materialize in product and provides a value to users.
By the way, on Notion, and totally off script, and there's no graph for this, but how do you guys see the Granola, flash in the pan to a certain extent? Such an amazing tool. Every VC in Silicon Valley uses it, and they kind of like have Notion, starts with like a weaker product, but kind of like executes already their massive distribution into kind of like capturing that. And, right now, Notion is the primary way in which I do AI transcripting in the places that I do it versus Granola completely being obviated and uninstalled.
Productivity tools are a really difficult place to build a business. I spent a lot of time in this in my prior life when I was at Index. Um, it is like somewhat random, I would say. Like, why did Notion end up becoming sticky and somehow like end up with the distribution advantage when in the face of Google Docs and Microsoft Word and Airtable and Coda and all of these other tools that like happened before it. They had this brand and design sense that really differentiated them, but how quantifiable is that? How repeatable is that? It's kind of its own special snowflake type of, you know, and,
I'm
and
imagining a founder of one of these productivity tool companies that Chris invested in coming in and Chris, why did you select us? It's kind of random.
I spun a wheel and I threw a dart and like it landed. No, I mean, you have to feel like,
Chris
it's
says
not
this
this
as
like,
an investor in Notion at his previous
I
firm.
love the product. I've always loved the product. It was the company I talked about during my interview at Index. This was in 2018. So I love the product, but I think it's by random. I just mean actually random's not the right word. I think it's very bespoke. Maybe bespoke is the right word. Um, and yeah, you're constantly going to fight against distribution issues in productivity because chances are like you haven't discovered something totally novel and new in productivity. It's really more of just like a new type of user experience or a new repackaging that you have done, right? It's not like fundamentally new technology. Like rarely is it that, right? Most things you can describe it as like Word with a different skin or Excel with a different skin or PowerPoint with a different skin, right? At the end of the day.
Yeah. I mean, I have less experience here. My like direct product feedback is like Granola's transcription and AI and templates are way better, like out of the box than Notion's. But Notion's like full end-to-end workflow is just better. Like, and I think we've chosen to just like stay in Notion because it's really convenient to have everything in one place. But like, you go and look at the notes for Granola and you're like, this is like actually way better. So I think
And
that's the tension
is your
point.
feeling that is reached escape velocity Notion is kind of like, so far off and that is already like his own category. And because again, like,
Oh, I don't know, because I'm not a power user of Notion. And Chris would be able to speak better, but like I just use the defaults. So like I actually think there's a lot of wasted value in the way that I use Notion versus like the person who's hyper optimized and is like, you know, is actually a power user of it.
Yeah.
Like I'm the high margin user of Notion for them. Like I'm using very little servers underneath the hood.
So to get into it, like both Notion and Airtable were, I would consider roughly a similar cohort of productivity tools that popped up. And
Yeah.
there used to be this great billboard that Airtable had, when you're off ramping off of 101 and going into Hayes Valley, they had
Classic.
this like mural and it was like Airtable and it had something and it said some assembly required. And I thought that was actually really essential to what they were selling, which is it's not it's not like total chaos and like, you're gonna have to code your way to the database that you want. But it's all or sorry, it's not like totally free form. You're gonna have to code your way to it. But it's also not so rigid that you're there and you wish that, some things were a little bit different. And so they struck this exact right balance of like doing just enough work so that you're invested in the tool and feeling like it's personalized and it's yours. And it's almost like, like it's the idea of like a personalized custom tool for you. And both Notion and Airtable, I think, capture that moment pretty well. Um, and I think it was like the right moment to capture it. There were so many software tools at that time, and there still are, obviously. There's so many software tools, like a lot of them felt rigid. They didn't quite feel like the way that I wanted it to be done. But now there's like a really easy way to effectively create my own instance and the way that I want to do my workflow, and they really captured that.
And you could
Um,
shape it. Yeah.
yeah, but honestly, like I would have, if you were to ask me, like, what's the percentage market share that Notion has of documents or of databases, et cetera, I would still guess it's tiny, right? Like it probably pales to the market share of like Word or Google Docs or Excel
and
or Google
what do you
Sheets.
think? What do you think in 10 years is that number higher or lower?
I think it's a slow burn. Like
Okay.
I don't, the corporate world like just doesn't move. Like I even still use Excel and, you know, like, yeah, I'm a boomer, but
Okay,
I'm
speaking of
probably not getting
boomer,
off of it.
speaking of boomers, I will present you my chart as an ending. Nothing to do with stables whatsoever, but I thought this chart was absolutely magnificent. It is so arresting visually. I'm sure there's some chart crime in here. I can already see some chart crime happening, but just like visually arresting, it did a really good job at kind of like, evoking feelings in people with this one. So what's happening is on the x-axis, we basically have time, years from inception, for all of these different companies that are listed or that are graphed with different colors on a plot chart. And on the y-axis, you essentially have cumulative dollars made or free cash flow in the history of EV makers in billions. So effectively what you see is something that Chris immediately called out, which is, by the way, this is obviously like a perfect example of a J curve, and it works for venture funds and it works for startups and companies, et cetera. And it's just so arresting because Tesla goes from obviously like baseline to burning almost $13 billion to then all the way up to $20.3 billion of cumulative free cash flow, which is absolutely stunning turnaround. And now the question that obviously like turning to you, fine folk, is the one that begs immediately is, are any of these other companies going to inflect? Because there's a few already here, they're dead. And it could also just continue going down into the right? The J curve is not guaranteed.
Not guaranteed at all. First, like, such a testament to Tesla. What a great product. And so, there's a lot of things that are underpinning these lines.
Disclosure: Chris on owns a Tesla.
To own a Tesla, I think it's a great product. I'm very happy with it. Man, a lot of doxing for me today. Guys are just
Should we also self-identify? I'm an electric car owner too. Brett is the only one that likes
I'm a
polluting.
gas guzzler. I'm a Toyota.
yeah, Brett gets like 4 miles a gallon down the highway.
That's why I sit in the right lane.
So, one of the things that is really important, actually, if you were to unpack this line, is what is the actual gross margin of each of these businesses? Because actually, the majority of these businesses, I think, are gross margin negative. And I think Rivian like just turned gross margin positive or something like that. And what are they in year 7 of their business, right? That's just like a massive amount of commitment, a massive amount of work required to just get to gross margin break even / positive.
So, but
And if you're not,
is your expectation that Rivian, after $22 billion burn, will actually start inflecting up here?
I think they've got a pretty good chance. Like, if you turn gross margin positive, I think that's a necessary, obviously, condition. It's not sufficient, obviously, but it's like 100% necessary. And so they've, hit that check mark. Their products are also good and they're selling, really, really nicely. And so that's the key thing is like, what is the scale at which you're able to get to gross margin positive? And how long does it take you to get to that scale? And there's so many factors, I think, that's buried in that, which is like your ability well, obviously there has to be demand for the product, which has to be matched with the capacity of your factory and your manufacturing, along with the ability for you to raise the amount of capital at the right cost of capital to like float your business. This thing's so hard. Like, it's got to be one
I'd
of
be
the
curious
hardest
to
things
see how
do.
much of Tesla's winnings are margin expansion versus volume, of course, and top line, the revenue growth driving this with like very low margins. Obviously, there's a lot to say here.
Yeah,
But this is pretty cool.
super cool.
Yeah, I had the same question of like, I would love to map this to the number of cars produced, and like number of cars on the highway. Like, I don't have intuition for some of these like longer tail brands. I'd
See,
also
this
be
is how we
interested.
know all of these AIs are still useless. Like, how hard is it? This data is all public. We should be able to tell one of these GPTs to tell me it took this chart and like graph it, and all of them are going to, just candidly just shit the bed if we do it. We know
Yeah,
all of
for
them are
sure.
going to like.
You must have just listened to the Andre Karpathy Dwarkash episode.
I did not. What is he saying?
Oh, this is like the whole like everyone's on Twitter saying like the AI bubble has burst because Karpathy's like AGI is like actually a decade away. Like, there's a bunch of stuff that needs to happen. I'm in agreement with you. Like, AI couldn't do this for us, and this is what everyone's freaking out about on not on crypto.
I don't know.
Twitter, on tech Twitter.
Omir from Chaos is always telling me that is like that his can do it. So maybe we should invite him next week onto the program and just like feed him a couple of like curveballs so he can in real time generate some of these
Live
for us.
demo.
Live
Let's do
demos.
it. Live
Let's do
demo is
it.
scary.
I'll just send him a message and put him on the spot. It's like, you're coming on and this is gonna be live. Our first live in the charts.
Love it. All right,
Yeah.
guys, it was great to see you all. We gotta come back and do this again next week.
Let's do it. Maybe with an invited guest speaker. Later, guys.
I like it.